Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Wednesday edition, the first day of the Humphrey-Hawkins Testimony. So for those of you who might not be familiar with it, I got the picture of Jerome Powell up here. In 1948, you have the Employment Act, or actually 1946, you had the Employment Act, and that was really called the Humphrey-Hawkins Full Employment Act, which has now been changed to the Full Employment and Balanced Growth Act of 1978. What it requires is semi-annual testimony. So twice a year, Jerome Powell will sit down in front of the financial committee and basically say, here's the status of the economy. Now, I don't really look at Jerome Powell's opening comments. There's a couple things and reasons why I watched all 3 hours of the testimony today. I'd rather watch Lord of the Rings, honestly. It was much better. But testimony, some of it was good, some of it was bad. I always like to make my notes about where I think the Fed might be pivoting and focusing on and what the politicians are thinking, because certainly it can create some waves for the markets going forward with regards to what they implement on a political level. So the opening testimonies were okay. I thought Maxine Waters just stumbled and looked kind of silly out there with her line of questioning, but some of the other ones did some pretty good questions. But it starts off with Jerome Powell going through pretty much what he already read, right? He read at his recent meeting, at the FOMC meeting on Wednesday, he read pretty much the same statements. There was no surprise there. Where they do get him is with questions about the markets going forward. So I thought I would kind of give a couple little pieces that I found interesting. So Maxine Waters, one of the major things that I noticed is sometimes these politicians ask a question and you just got to put your palm on the head of your hand and go, you asked a really stupid question. Like, you don't understand macroeconomics or the economic cycle if you think that that's what caused A, B, or C. So for example, Maxine Waters said, we must focus on the reduction of inflation, right? We have to focus on reduction of inflation. And the cause of this inflation has been housing. And she's going, no. Housing doesn't cause inflation. It's a result of inflation. And she says we must, start immediately looking at Affordable Care or Affordable Housing Act to bring housing prices down. It's like, if you're an entrepreneur, you're not going to be building houses on the cheap. You're going to be building houses trying to get as much money as possible. So kind of a weird question to throw at Powell. Anyway, I start there because there were multiple comments about housing today. And I thought that would be at least something maybe to look at going forward because, of course, housing is 15% of GDP. Now, to respond to Maxine Waters, Jerome Powell said something really interesting. He goes, with regards to housing, what you have is a cycle. And what will happen is as these leases expire, they'll get renewed at a lower price, which in turn would mean that inflation is going to drop. And I ask you guys, let's just, all things being equal, right? Everybody here is a landlord right now. You have a property, okay? I want everyone to respond to this one. You own a property, and you've been raising your rates, right? You've been raising your rents on that thing because everybody's doing it. Market's hot. Why not? You have a full line of people. You can always rent that to somebody. So all of a sudden, your tenant's lease expires, and let's say it's, it's California, so a two-bedroom apartment that you have rents for, let's say, $2,800. So the lease expires. Are you going to go to your tenant and say, I noticed your lease was up. How about you pay $2,500 this year per month? Lock in for a year, I'll drop it $300. Or are you going to keep it the same or continue doing what you're doing until you struggle to find tenants? You guys let me know. Let's do a poll. Is housing a privilege, right? Home prices, I would agree, are in a bubble, and they're going to come down. We're seeing that right now with the Case-Shiller Composite 20 Home Price Index, which I'll show you. But I'm pretty sure that the response I'm going to get from most of you is, I'm not going to lower my rent arbitrarily just because inflation's high. I mean, I'm also suffering from the impacts of inflation as a landlord. So I think you guys would all agree. You're probably going to keep the same. I'm with you, Ricardo. I would probably keep the same, depending on if it's a low rate. Yeah, right, everybody? So watching Jerome Powell's comment on that left me shaking my head. I go, are you with the Mother Teresa of landlords, right? We're going to make sure that I'm going to get my rent, and I will probably keep it the same. If I like the tenants and they're great, I'll keep it the same. If they're kind of giving me problems, hey, I'm allowed to raise every year, I'll keep raising. And Saba is really the ultimate right answer until they can't fill rooms, right? So if all of a sudden I raise it too high and that tenant says, I can't pay, let's say I go from $2,800 a month to $3,000, right? So I've jumped it $200 a month. If at a certain point in there that I can't fill it anymore, I'll drop it back to 2,800, and I will supply and demand will dictate where I keep my rents at. If demand's high, and I know right around in Orange County here, it's really high. I mean, incredibly high demand. So they'll keep raising and raising. I would give my tenant 80% discount. Yeah, right, KF? You're so good, you get a year for free. Yeah, I don't know what Powell was thinking about, but that one kind of struck me as really odd, especially as someone as prominent in the industry as Jerome Powell. That is why people out of touch with reality should not be powerful positions. I agree with you, Lisa. Blows my mind. Maxine Walters' question, saying that this inflation is a result of housing just shows you that they're not all there, right? And I'm sure that she has her skill set and area of expertise where she can throw a question and I would not have a clue. But boy, saying that housing is causing inflation. It's like, no, actually, senators, you're the ones who cause inflation in conjunction with Jerome Powell. So let's not throw stones. What's up, Don? Good to see you. Rent equals location, 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 plus amenities and so on. Yep. But I still think, John, you would not lower your rent just because, well, inflation's subsiding, right? Inflation has dropped from, let's call it almost 10%. Now we're down around 5%. You're not going to lower that price. You're going to rent your apartment out of your room or your house for whatever demand will get you. What are some other interesting ones? There was a big discussion today, which, I have mentioned that my belief was Q1 we'd have a strong market, Q2 we would slow down to be flat, and then Q3 and Q4 of this year we would start to see the market subside. Now, in my wildest dreams, I did not think we were getting as much move up as we did in the NASDAQ. Watching the NASDAQ soar as it has been incredible. S&P 16% up, okay, that's great, but really the NASDAQ's the one that's just tearing it to pieces to the upside. So the comments from a lot of the interviews I saw, the testimony I saw today from senators and from Jerome Powell was focused around capital requirements for the financial system and really for banks. So if you put more stringent capital requirements on the banking system, which has already been pressured, of course, we've had the issues with Silicon Valley Bank and Signature and all that, with that systemic risk, they're going to tighten capital requirements, which means they're going to put better stress tests on and make sure they have more money there because they didn't have money in place before. In doing so, what that means is the deposits that you lend into a bank that would normally get lent out to help that bank grow and help the economy grow and help earnings, there's going to be more required to be held, meaning less gets lent out, which is going to start to impact growth prospects for the economy, which is, again, why I'm lining up for a bearish second half of the year. One of the senators really said something interesting. He says, based off a study, I forget some government agency, if you raise capital requirements 1%, just 1% more money needed to be in the bank, you will drop GDP by 0.16%. Now, of course, that's all some economic formula. I'm sure there's going to be fluctuations, but it just does raise the point of the higher those capital requirements are for banks, the less likely we're going to see robust growth. It will start to diminish that robust growth. So let me bring up a calculator here because let's just put one basic measure of capital requirement is reserve requirements. Just the amount of money that they need to hold from customer deposits. Historically, it's around 10%. Right now, it's at 0. That was the Fed put that in place to juice the economy. So if I go out here, let's go to our calculator on the side here, and every 1% is 1% of increase in capital requirements is 0.16. Well, if I do a 10%, meaning the banks now have to have a reserve requirement of 10%, which is normal, times that by 10, you're looking at a 1.6% decrease in GDP. Well, we're already under I think we're at around 2.8% GDP right now, which would take us down to about 1.2% GDP. So for those of you who are laughing at my thought that we'd see GDP decline or that we would see the economy start to slow down, it's becoming a much more real discussion if they do start to raise bank capital requirements. And given what went on with our banking system over the past, let's call it 6 to 8 months, very likely we're going to see higher capital requirements for these banks, which means capital is going to be harder to get. Business have a hard time expanding, and we could even extrapolate that to mean that loans for homes might be harder to get. Right now we're about 7.2, 7.3% for a 30-year fixed rate mortgage. You tighten capital requirements. I mean, the banks can't lend out as much. They're going to charge a higher interest rate for the money that they do have to lend out, which means you're now looking at 30-year fixed rate mortgages, 7.5%, 8, 9%? The domino theory is an interesting one. Will interest rates increase? That was another comment. Let me run through my checklist here because I watched all 3 hours of this testimony. I didn't get to trade as much as I wanted, although I did buy a bunch of silver today. The UKIP is really crushing with is really getting crushed with inflation. Yeah, they were a bit behind. The UK started raising, I think, 2 or 3 meetings after the US. It's the EU that I think is really in trouble because they started like 8 months after the United States did. So, let's see. I can talk about Maxine Water to talk about. He did say. So you asked Naum about will interest rates increase. He didn't definitively say yes, we are raising rates, but he did say nearly all FOMC participants are approved to raise rates more this year. Right? That the consensus on the panel was we're going to raise more this year. So if we go out to look at our CME Fed Funds futures, which I know I didn't. Yeah, I know. All 3 hours, Don, it was brutal. Some of them I'm like, I'm just embarrassed that you made it to be a senator. I absolutely just dumbfounded at the colossal stupidity of some of these. Thank goodness I get to see Representative Green speak again from Texas. That guy just blew my mind when he testified last week. Here is our current forecast. So the numbers really haven't changed. They dropped a little bit today. Yesterday was a 69.7% chance. Today there's a 71.9% chance of a 25 basis point increase. What I want to look at is by December, right? So the next meeting, we're pretty sure you'll see a 25 basis point increase. I personally think you'll stay where we're at, but right now they're saying 71% that you're going to increase. Let's see what it says by the end of the year and how much has that changed today. So there was a slight increase in a 50 basis point increase by the next meeting. That jumped to 10%, but it was 4.8. So we're pretty much holding pat. Expectations are that we'll be 25 basis points higher by the end of the year, which I could see that, right? We've got 4 meetings left till the end of the year. I could definitely see that coming into play, and we'll hold on to the end of the year there with our maybe 25 basis points or no increase at all. So they definitely made it seem like there's going to be rate increases. He really set the stage for everybody. Pretty much everybody on that panel has agreed that it's appropriate to do more increases by the end of the year. So they've set that. Did testimony cure my insomnia? No, nothing cures my insomnia. Nothing cures my insomnia. Drugs, but I don't want to take any drugs to sleep, so I'll just suffer with insomnia. By the way, this is just the first day. Tomorrow there's another testimony coming through. Let me see. So they'd forecast by the end of the year. Oh, that's the last page. That one more potential rate increase. Housing inflation, he talked about declining, which I thought was interesting. And the other part, which we talked about, like what's that next shoe to drop? What's the next area of real pain? Commercial lending. So I forgot which senator it was, but she brought up the point that $1 trillion worth of commercial real estate loans are coming due in the next couple of years. Now, of course, that's a couple of years. There's time there. But I think most of us, if you drive around a major city, particularly something like San Francisco, and you see the vacancies that were caused, not only because the city's just turned into absolute slum, but also the fact that so many people are working from home, working remotely, need to pay for these big office spaces. We could see a huge problem there. And they did talk about that, didn't come up with any solutions whatsoever, just kind of put it on the record that they spoke about it. So when these senators talk about it, they can circle back and say, see, I told you. Will the bank reserve increase cause savings interest to increase? Not directly. Okay, so what is the direct result of your interest rates is going to be what the current Fed funds futures rate is. So right now you're looking at 5.25. So if that continues to move up, so let's say we get another bump in the near future. Well, let's say we get 25 basis point increase by the end of the year. Then those of you who have like an Ally Financial or what was the other one? Signature Bank, not Signature. Ally or SoFi. Those are pegged to that. You'll get a bump up. If you're a Chase customer and you've got a regular savings account, you're not going to get any bump. Doesn't matter. They're going to pay you 0.01% for whatever the interest rates are. So it will differentiate or be different for each bank going forward. So take key to that one. Another piece that was interesting here. One of the questions that came in from, again, one of the senators, there were just too many of them to write them all down, was what's the impact that this is having on the dollar? And Jerome Powell's response is pretty awesome. So here's your dollar today. We saw a nice little drop. You can see the dollar here down about 0.44% today. Still fitting in this kind of descending triangle, weakening position that we've had it in, inability to make new highs. So I'm still bearish over the intermediate term. We'll see what happens if we get below these lows let's bring it down here. You get down below these lows around 100. We break 100, and I think you got some definite downside movement there. Jerome Powell's comments on how does all of this rates, et cetera, impact the dollar. He basically said, that's not my concern. I don't really care what it does to the dollar. That's the Treasury Department, so you'd have to ask the Treasury Department. It's like, man, if you are somebody like Jerome Powell, who's in charge of the Federal Reserve, making all these policy decisions, and you're not taking consideration how it impacts the dollar, shame on you. Now, of course, he is looking at that stuff, but it was kind of funny for him to say that, like, I don't care. Whatever we're going to do to fix inflation, and we're going to do to fix the jobs market. That's it. That's all they care about. The dollar, who cares? That was the last little interesting piece that I got there. Short the dollar pretty big. That thing can burn. Well, it might. Let it drop. I'm fine with it. You know, a drop would mean a market rip. So let it tank here, and we'll see maybe some more upside for these equity markets. Now, that said, let me real quickly start at the bottom, work our way up. That article I released on, what was it, midnight on Monday, was about, a pullback coming. And I specifically focus on the NASDAQ. And I do think that the pullback is underway. I don't know how deep it's going to be. It would be great to get down to the 14,400 mark on the NASDAQ. But topping out in overhead supply on that triple Q, pulling back. Today you saw a 1.39% slide. I'll bring up the QQQs, which is where I did the analysis for that bar chart article. And there you have it, selling off. So your ultimate stopping point, if you see this pullback here continuing, you could use a wide variety of different tools to get there. I know some of you have been looking at this level just a bit lower, right around 348. Well, realize that level is no longer fresh. It's been hit before. Now, I don't see why that would not go there, but it doesn't mean that it's going to stop and turn. Ultimately, I think you got some big unfilled gaps that are much lower, down around 331, which would be obviously a great pullback point to be acquiring at. If you wanted to, again, you could be pulling up some fibs and looking at retracement levels there. But I right now think you'll probably see it head down towards that 348 mark if this does continue to drift lower. So pullback in effect, 1.36 for the triple Qs. On the NASDAQ, you're looking at 1.39 move to the downside. S&P was relatively similar. Yesterday actually looked decent for the NASDAQ. Started off real weak and then recouped a lot of its losses. The S&P, though, didn't recoup its losses yesterday, down 0.58 again today. So you've had a 3-day slide here for the S&P. I put a blue line at 43.27, which is kind of, these are always difficult because you can go one of three ways. You can go from the origin of the gap on that started this all, which is Thursday, the 8th of June, which would put you right around, let's call it 4,300. Then you have where it gapped up to, which would be this bottom of the green bar right here, which is about 43.41. I think both of those become very logical targets for a continued pullback here over the next couple of days. Now, if testimony tomorrow goes like it did today, which there were a few questions that really, I think, caught him off guard and were a bit choppy. His response was, he didn't get defensive, but there were a couple where he was like, this is why they could never have me in Jerome Powell's situation. Because he's so courteous, he's so polite. I'd be like, that's a stupid question. Why would you even ask me that? It has nothing to do with what we're talking about here today. Let's talk about policy. Let's talk about rates. Let's talk about economy and data. You're talking about, widgets and all kinds of other stuff makes no sense. I just don't have the tact to be a courteous, kind person in those testimonial type of situations. So bravo to Jerome Powell for sitting there like this, looking all serious and coming up with some very nice answers. Anyway, S&P was down 0.58% today. 44.09 is where it closed. Actually, that's where it's at right now, which is after the close, obviously, to the tune of about an hour and 19 minutes. Dollar index, since we added that to our list recently, down 0.43% for the Dixie. Again, I am of the opinion that we are going lower on this one, right? I thought we had this yellow bar here, and the reason for that was if this pullback was just a pullback and was going to bounce out, that's the spot. But it didn't, right? It did not bounce there. So again, I am of the opinion that we're headed back down towards 100 mark here on that dollar index, and we'll see how that plays out. I still, like I said, I've left this huge head and shoulders pattern that we had going all the way back into mid-2020. Didn't come to fruition, right? We just tiptoed across it. Actually, we've still been basing on that neckline. So there would be your measuring object. We'll see if that comes to fruition. I don't know what the direct impact would be, though. If we had this head and shoulders pattern that you see here actually come to fruition and actually hit the measuring object and the dollar goes to 87, what does that mean for our equity market? Does that mean we just see a colossal bull market rally? I think it very well could. But we'll have to wait and see. I just wanted to break those levels first. So there you go. All right, let me go up our list here. That was the dollar index. Russell 2000 down 0.26%. Still stuck within the bar box here. We got that small little yellow box right there. Little spinning top formation today. We'll leave this smaller box as kind of the current target right now. Don't get your day trader talk. HNS is yet to give it break. Let's see what you got there. Gold. So I didn't buy any gold today. I bought silver today. I bought the underlier. So I bought a bunch of SLV, and I also sold calls against that position right away, just because I do think you're going to see it kind of drift sideways for a little bit. But I'm long-term bullish, so I ended up buying some silver outright. Gold was down 0.14% today. Technically, slow burn. Not much going on here. We've hit that line at 1936 a couple weeks back, going back into the end of May 26th to be precise. Right, this is the third or fourth retest of that blue line at 1936. So you do have a hammer formation on gold's futures today. So if you are expecting a rally up, might get a small pop, but that trend, at least for the past few months, has been to the downside, and I do think you'll see it get even lower here. Just the trend is your friend, to the bend at the end. Let it run. I wouldn't last 5 minutes on those questions before I offend it. Yeah, exactly, Don. Me too. You and me both. All right, so here is your 10-year. Now, you had a ton of volatility, not as much as directionally yesterday, right? Yesterday was just a giant, big red candle. Today, you had a long topping tail on it, but then all of a sudden, it kind of rebalanced itself and ended up finishing unchanged, pretty much unchanged on the day for Wednesday's session. So we'll call it unchanged right around 3.72. Crude oil. A little bit of a bounce. We had the bearish Harami looking kind of formation, although the tails on yesterday's candle would negate that, but it still was a relatively bearish pattern. Didn't matter today, just ripped right through those highs. My guess is that yellow box will be back in play, and we'll see this thing challenge that $76 level going forward. And lastly, the King of Kings, 25% rally in the last 4 trading sessions for the largest position in my portfolio, which I'm very happy about. Bitcoin was up 7.38% today, rallying right up to 31,000. And I've had that green line on there for quite some time because that was kind of this area of overhead supply going back into June of 22. So watching this move up over the last couple of days has been really just shocking. And I think, again, a lot of this has to do with BlackRock's petition to file a Bitcoin spot ETF, bringing all kinds of renewed attention. And it's not just popping Bitcoin. I mean, look at MicroStrategy. Right, so obviously MicroStrategy, one of the biggest holders of Bitcoin, it pretty much looks like Bitcoin's price chart. And then GBTC. Right, GBTC also soaring, slightly different the way it finished today, but all in all, this is really propping up most of the market. And if you look in the crypto world, which I will scroll down here, just scroll down here to our crypto stuff. You have a lot of double-digit gainers. Conveniently, I saw Hex token was on there, which I have on here as a scam token shitcoin, but unfortunately it did really well today. But Ethereum up 5%, Bitcoin up 7%, so a lot of really good moves there. Do I think the BlackRock Bitcoin ETF is going to get approved? Ooh, I mentioned this one yesterday, and I think it's kind of a conundrum because you got the Valkyrie, you've got Beto, you got BTF, you've got Grayscale, all have petitioned to issue spot Bitcoin ETFs. I think there's 13 different companies that have petitioned over the last few years to have a Bitcoin ETF, and every single one of those has been rejected outright with really little explanation. If BlackRock were to get it, there's no way we could look at this current situation and think there isn't crony capitalism going on or some buddy system or some influence by BlackRock. I hate to say it, but I do think BlackRock's can get approved. Now, what I think will happen is to save their ass, because if the SEC approves BlackRock and they've turned down all these other requests for years, boy, it really makes you wonder. I mean, everybody knows that BlackRock controls everything. None of these guys are BlackRock, though. They don't have to be BlackRock. You don't have to think of the mafia, right? The mafia can do things that make you do things, right? You could argue that a restaurant owner had nothing to do with the mafia. But the restaurant owner is getting threatened by the mafia to do certain things, and they do certain things. I don't know. I feel like there's going to be some serious pressure from not only BlackRock, but its affiliate businesses, right? There's a lot of businesses that BlackRock owns. They own everything. So I think you'll get pressure from BlackRock. I think they'll get approved. But to save their ass, what I think will happen is the SEC is going to approve another one at the same time. I think that they're going to do 2 at the same time and say, okay, here we go. We'll just do these 2 just to save their ass. And they'll pick one that, the best of the bunch. But I think BlackRock will get approved. BlackRock owns the world. Yep. It's funny when you look at when you look at Goldman Sachs, this was my I love this talking point back in the late 90s, is they used to be called Government Sachs. And you could pull up the Bank of Canada, Bank of England, all these major banks around the world, major institutions, major financial firms, major government agencies, and there was always a Goldman Sachs employee in there somewhere, a former Goldman Sachs employee in that company somewhere, usually at a high-level position. So they called them Government Sachs. Now it's BlackRock, right? So you work for BlackRock. My guess is they're just farming employees. You work them, you get them educated in a certain area, and then you get them a job at the Fed, you get them a job at a central bank, you get them a job over here, there, and the other. Yeah, and drives me nuts. They sure don't work for Americans. They work for themselves, man. That's what America's built on, capitalism. Built on capitalism. We need to take money and make money with it. That's pretty much all they will do, and they will push it whatever cost to get that to happen. So, unfortunately, there's a lot of people that will suffer for that. For us, let's just look at this stuff. Let's just look at price charts and make trades, make investments on it, and hopefully, beat the system. For the SLV trade today, so I purchased at 21.92, I think was my number. Purchased 21.92. I sold the I purchased at 20.92. I sold the July 21st calls on that at, I think it was 22.50 or 23. I can't remember. I did a whole bunch of options on that one today. But that's my thought, is I think you're going to kind of see this silver drift sideways for a little bit. I like buying at this level where it's currently at. That's fine with me. Again, I'm long-term bullish on silver. If my thoughts are correct and we get some traversing sideways here, some choppiness, then by July, I think we'll be right around that $22 mark. So that's why I went with the 22s today. So I'll get a little bit of the underlying move if it moves up, but I'm really counting on just the premium I'm collecting on that underlier. Did Mo just say that the mob owns BlackRock? No, I didn't say the mob owns BlackRock. I said it's kind of like the mob, right? Where the mob can influence people. Even though the mob may not own a restaurant or own a business, they can sway those business owners by threatening them to do certain things, and that's what I'm saying. There you go. Not even throwing some Molotov cocktails. At what price do you think Bitcoin be possible good short for a day trade? Well, I'll tell you this, I'll never short Bitcoin. I'm too much of a believer in the technology to short Bitcoin, but if you're looking at it, I would argue right now is probably the time. You're right around that 31,000 level. Of course, you're going definitely against the grain and it's super risky, but if you're playing overhead supply levels, it's a counter trend trade. You've got a strong rip up in Bitcoin right into overhead supply. That typically would be the point where you want to do it at. I would say have a tight stop loss, because this thing is going to, if it does break through this, it's going to rip real fast. And if you look off to the left, right, this is a daily time frame. There's nothing really in here that would warrant or draw my attention to any sort of issue with price. I'll put another little red line right here just for fun. You've got, right now we're hitting 31,000. Well, we're just above 30,000, but next target will be right around 36,000. Then you got 40,000. And if you're short and that thing rips up like that, you could find yourself in a world of hurt. So I personally wouldn't short this one, KF. I think it's just a little too crazy for me to do. But if you want to, you're more than welcome to short that one. All right. Let's see. I had some questions I didn't get a chance to yesterday. One second. Let me see. About to pop. My PX holding. Oh, no. I guess I already answered all my questions. So no fresh ones have come in other than the ones you guys are typing in a chat. So if you got them, type in a chat. I will answer those. If not, I'm going to wrap up here. It's a relatively quick show. The only other piece that I wanted to bring up, just because we haven't looked at it in a while, is that inverted yield curve. So there's your 10 and the 2. I bring this up because we're seeing it separate again, which means that short end of the yield curve is rising up, and therefore you're seeing this decline. So we're almost to the worst separation between the 10 and the 2 that we've seen. Here's your daily. I'll go back to a weekly so you can see longer term time frame. Again, when you see this type of situation, this does not bode well for economies going forward. And a lot of people are calling for a recession going forward. This is one of those pieces that does drive home the possibility of a recession going forward. Meaning, if you were to buy a 2-year note, you would earn 1% more than if you held it for a 10-year bond. That's just wrong, really wrong. And it's even worse when you look at the 10 versus the 1. right? That one hasn't really bounced at all. Had a little bounce, but right now you can get 1.5% more by buying a 1 year versus a 10. So, anybody who's buying bonds, why on earth would you buy a 10 year? There's no point in buying a 10 year when you can lock in and get a much better rate for the 1 year. So thought I would share that one just because we haven't looked at it in a while. There was a period of time where the belief was we were going to start to go back to even here and have that yield curve flatten out. No, the yield curve is steepening even more. So that will certainly be a factor for our markets going forward. Bollinger Bands are pinching on the weekly, monthly for IYC. Oops. Go back there. I had to unfunds. You're talking just consumer discretionaries? I mean, typically what I do, I don't put indicators on anything anymore. And what you guys know, the way I look at it, I run through these sector ETFs. So you're looking for consumer discretionaries. Well, I got those on here as well. Oh, inverted yield curve. Okay. All right. I thought you were talking about IYC as like the. No worries. Sometimes a lot of different ticker symbols and stuff out there. So yeah. Typically for me, like today, I was looking at this list because I want to put some capital to use, and I was looking at selling some puts on these, but I'm not going to do anything with technology or the QQQs right now. I want to wait and see how far they actually drop, and if they do continue to drop, then maybe I'll buy or sell some puts on those or buy outright. But right now, I'm kind of holding off, even though those are your two worst performer segments right there. Now, as far as consumer discretionaries, well, let's start up here. If we look at the overall market segments, right, this is a weekly. So I've got utilities, consolidation. We're making lower highs and higher lows, so it's just coming to a press point. No big deal there. Energy has been kind of the one that I'm surprised hasn't been moving more. Again, on a weekly, it just feels like it's stalled out, but we haven't really made new lows. Get me old lines off here, which are trash. Let's look at where we're at loosely. You can see we're still drifting up from the lows perspective, but we're also dipping lower from the highs perspective. So most of these are painting a rather negative picture, all right? Just consolidation, a lot of volatility gone. Now, industrials. Here's weekly. I guess I could shift back over and go to the daily because I do like the daily better. Right? If you look at that industrials, we are coming into those overhead supply levels from late 2021. Fine. If you're playing the industrial sector, but yeah, I could run through each one of these, but I won't unless you have a specific one you want to look at. Like John D. Thoughts on why the VIX is declining? Yeah, because people aren't worried. VIX is generally the fear gauge. So let's go to your VIX today. It generally means that people aren't buying puts, which typically if you have a sell-off like you did today on the S&P, it's over 0.5%, you would anticipate that the VIX would have actually been moving up significantly today because that's a good decline. I didn't see that, which tells me that there is just kind of maybe nobody's really worried that this is going to be a prolonged decline. If it was anticipated to be a longer decline, you'd see the VIX surge as more people were buying puts to protect that bearish position or to take advantage of a bearish position. But we're just not seeing it right now. So VIX is continuing to drop. Remember, when VIX is low, that means that people are really not worried about market pullbacks. They're not worried about market crash. They're optimistic. When it gets really high, that's when people are panicking and fearful. So, John, to answer that question, the VIX trending down simply because people aren't rushing to puts right now to buy for protection on this downside move, which tells me that people don't believe that this is a legit market pullback. They're just waiting. So, okay, fine. Works for me. And just one or 2 days worth of separation there on the VIX isn't that big of a deal. But the prolonged trend that we've seen, right? You had this big move up here, which means complacency and people aren't looking to buy puts. And then you look at what's happening in the VIX now, it's still drifting down lower. But today I'd say was the outlier, but at least it's stalled over the past couple. If we do see more S&P drift lower, like let's say we do get down to that 4,300 level that I'm thinking it's going to get to, then you'll see this VIX take a nice spike up. Right now, I think there's not a lot of fear and panic out there, but that might start to settle in if the S&P continues to drop down lower. All right, I'm going to wrap up here early. Wow, man, I told you I was trying to get to 30-minute shows. I'm almost there. It's 34 minutes, and I got a couple minutes here I'll wrap up unless you guys have some last-minute questions. Let me show you the calendar here just so we can take a peek at what's going on for tomorrow. Obviously, I mentioned that we have the second day of the Humphrey-Hawkins Testimony, which is a 2-day semi-annual event. Jerome Powell will be testifying in. I don't know if I'm going to watch all 3 hours because I feel like I just didn't get a chance to make the trades I wanted to make today. I was too sidetracked with all that. So He's testifying. That's going to be 30 minutes in the market open. Difference for tomorrow is we've got a little bit more economic data coming out. So I'll scroll up here to the very top because Thursday, early morning at 4 a.m. to be precise. Let's start at actually 12:30 in the morning. So right after midnight, Swiss National Bank expected to jump 25 basis points. But let's be honest, most of you don't trade the Swissy. If you are trading the British pound, which I know we got some British pound traders in here, you have a 25 basis point rate increase expected tomorrow. The one that I'm going to be interested in is not the rate itself, which is 4.75. It's this number up here at the top, which is the MPC official bank rate votes. What that means is the left number is raise, the middle number is lower, and then the third number is stay the same. So right now you've got 7 members are voting. 7 members are voting to raise it. 2 members are voting to pause. And what we'll see at the next meeting, which of course will be at 4 a.m. Pacific time tomorrow morning, we will see this number shift. And I think you're going to start to see the 7 more on the pause side and a drop on the raise side. Just because taking the lead from the U.S. markets. Although the U.K. does need to raise a little bit more to fight their inflation, but I think sometime soon you'll see that sentiment start to change. For the U.S., you also have unemployment claims. You have FOMC member Waller will be speaking. You've got existing home sales, CB leading index, natural gas storage, crude oil inventory. So quite a bit of stuff happening out there for tomorrow's markets, but really all eyes will be on Powell, and it could create significant volatility for you during the trading day. So be careful with that one. All right, one last question here, or a couple. I have a trade goal of 20 pips a day on the Euro USD. The question is, once the goal is reached, would you scale down the trade size or keep position size the same? I'd keep position size the same, but I would, move my stop losses up so I don't give all that back. Yeah, unless it's at supply. So if you got a 20 pip goal and it's right at supply, let's say you went long and it's right at supply, okay, and then maybe I'll just take it off the table because the odds are better it's going to turn at supply. So I'll take that money off the table. But if it's kind of got some room to run, I'll babysit that one for a while and just put a trail stop on it and let it go. Some of the best trades you'll ever have are ones that you thought were going to stop, but you gave it a little more room to run and just kept going and going and going. Just manage it with stop losses. How do you organize your radar screen to separate your different trading concepts? So the one, I have multiple platforms I use, but this is the one I've been doing most of my analysis on. I really have it simply set up. Now, what I wish they would do, and maybe they do it and I just don't know how to, is have collapsible menus. So the top 7 is kind of where I like to look and start, and I start our program here on TraderMerlin show with that one. I've got a couple little random ones here. I have my currencies list. I've got my interest rates. So I got, your 10 years and interest rate yields. I've got commodities. So I can see, wheat and corn and natural gas, soybeans, lumber, cotton. I've got my metals. So your nickel, platinum, palladium, uranium, copper. And then I have the sector ETFs. This is where I do my 1% strategy from. So I got like 11 in here. Then I have my cryptocurrency portfolio, which is the most extensive one in here. And then I have the banking sector, the financials. And I just put this in here. Because I was writing an article for barchart.com and I wanted to look at every single component. I'll probably take this out. I'll probably take this watch list out here as I have a couple bank stocks I've been following, but I'm not really paying too much attention to them anymore. I think, Bank of America, when I made that call back in late March that this is a buy on Bank of America. All right, well, it was for a while. It's still above where I said it would be a buy point at. What else was on there? Charles Schwab and JP Morgan were the other two. So JP Morgan's had a real nice recovery, beautiful bounce up, covering that gap altogether. So great move there. And then the last one was Charles Schwab, which has been the surprising one for me. It feels like it just has not been able to recoup yet, but it's definitely stabilized. So I'm still bullish on that. What does Budweiser do? Since you guys were giving me such a hard time about my Anheuser-Busch article, nice. I'm out of it. You guys know I don't no longer have any Anheuser-Busch. I may actually go sell some puts again on it. I think long term it's going to be fine. So let people panic and give me the premium. Is Elite Trade Channel the guys you have invited to your show several times before a good source of teaching details? I don't know. Elite Trade? I don't know. Oh, one second. I think you're talking about Jeff Manson. I think that's who you're talking about. I got to find out who. I don't know. I don't like to promote or tout anybody unless I actually know who they are. I don't think that. No. I don't think Elite Trader is the guy that I was thinking of. So I'm not sure. I'd have to dig and research in him. I know a lot of people in the industry, but I don't think Elite Trader is the one that I'd recommend on the program. I'm not a big fan of prop accounts either. I think that I think you should trade with your own money, not use borrowed money. I'd rather you trade with your money and keep all of it as opposed to give us a percentage to somebody else. But start though. Oh, it is his company, Thomasina? Huh. All right. I'll leave it at that. What's your opinion? Fear and greed index for stocks and Bitcoin. Does it have value? Blue Diesel. Interesting question. So, one of my goals is to cut out intermediaries. So let me see. When I say cut out intermediaries, I don't really need to have all these other indicators on the market, right? So, if to go back to your question. If you're looking for, where'd the question go? I thought I lost the question. Oh, great. I'm losing it today. If you're looking at an indicator to help you figure out where you think the markets are going to go, then just look at the market, right? So right here, this is Budweiser. Let's scroll up to the top and go to my S&P. If I were to look at a fear-greed gauge, okay, thanks, Thomasina. Oh, I think it's called the Elite Trader. Yeah, it's got the in front of it. Yep, that's Jeff Manson. Yeah, Jeff Manson's a good guy. You don't need to. Nobody here needs to have a fear greed index. Look at this chart. Would you say it's fearful or greedy? Pretty easy. It's a greedy market, right? It's a greedy market. So I don't believe in looking at those fear or greed indexes. That was Blue Diesel. I don't look at it for the equity markets. I don't look at it for Bitcoin. I don't look at it for anything because I'm just going to look at this price. Right now, the fear greed index for Bitcoin is going to be telling you people are greedy. Why? Well, because it's jumped 25% in 4 days. So you don't really need the index. Just think of this picture is telling you fear and greed. And right now, it's screaming greed. So no, I don't look at those things. I don't use it. They pop up on my timeline every now and again, but honestly, I don't really care. Price charts tell you everything you need to go. Everything that you need to know. Okay, let me wrap up for today. Tomorrow, we're going to have... I'm going to have John Rowland on the program tomorrow. I'm not sure what we're going to talk about. John Rowland and I are going to do a webinar for Bar Chart next Wednesday at 10 a.m. Pacific time, so kind of a morning thing. We will be talking about digital assets and cryptocurrencies. So for those of you who might be new or want to know more or just participate in the webinar, I'll get you that link tomorrow once I get him on the show and make sure we're all 100%. I think it's like a 90% yes, but we'll be doing that with John Rowland on next Wednesday is the webinar, and then tomorrow he'll be on the show to talk about all things market related. So if you have anything particular that you would like to have John talk about on tomorrow's show, you can email me, TraderMerlin@gmail.com, which is on your screen, or just put them down below any of the YouTube videos. Good news is I have some time this evening to go through those, and I will show you, read all those questions live on air. So thank you guys so much. Hope you had a fun day. Enjoy the second day of the Humphrey-Hawkins Testimony with Jerome Powell tomorrow. Should be an exciting one, as it usually is. I see I got some new names here. For those of you who are new, hit that subscribe button, hit the like button. I will see you all tomorrow. Take care.